And welcome. It's Mary Ellen McGonagle with your Weekly Edge show for Friday, February 2nd. Today, as always, we're going to take a look at the current markets and beyond. There is sector rotation that is beginning to shape up. I'll share that with you. And also some of the headline news that drove price action last week. Of course, earnings reports being one of those drivers. And last up, viewer question of the week. And it's all about how to capitalize on these big movers on earnings by looking at add-on stocks that are in the same industry. Taking a look at some of the news from last week, we did hear from Fed Chair Powell on Wednesday, and it was noted that the Federal Reserve is not ready to begin cutting interest rates at their next meeting in March. The news pushed stocks down rather heavily on Wednesday, however, quite a recovery going into the end of the week. We did get key jobs data, certainly today on Friday, where U.S. jobs growth showed as accelerating in January, with wages increasing by the most in 2 years. We did see a pop in yields in response to this. However, the markets were seemingly more centered around some of the strong earnings reports that came out, and we'll get into that certainly with some of the bigger movers. Also, consumer sentiment jumped to a 2.5-year high, also showing us that the economy is on very firm footing. Next week, there are going to be 10 different Federal Reserve officials that are going to be speaking at events, and depending on their comments, that could drive volatility next week. However, we do have a pretty healthy earnings calendar as well. So let's take a look. Where did the markets close for the week? Here we are with the daily price chart of the S&P 500. And as you can see, this is the Wednesday sharp pullback that I mentioned. The markets were able to recover quite nicely going into the close today. We do have a positive RSI and positive MACD, which keeps the near-term uptrend in this S&P 500, which is now at another new high in price. We're going to take a look beyond this broader market view beneath the surface, and there is sector rotation beginning to shape up. We're looking at a 2-month daily price chart view of the 11 S&P sectors, and first up in the forefront here is communication services. A lot of this is going to be internet-related stocks, and certainly Meta's 20% advance was a big driver for today's gap up. This is a sector that is very close to hitting a new high in price, and as you can see on this longer-term monthly view, the momentum is still in the early stages of possible upside advance. Let's take a look at some of these other sectors that are exhibiting strength, and I may not have mentioned, but I added an RSI, a relative strength indicator, and then sorted these sectors in descending order so that we can experience where that relative outperformance is currently taking place. So healthcare was up a healthy 2%. You can see this nice 3-week base breakout shaping up within the sector. As we move through, I'll share with you where the strength was in that healthcare area. Financials did waffle this week. They had been exhibiting superior outperformance, particularly bank stocks, but banks did falter this week. I'll share with you a view of that with the group remaining constructive. There certainly are other areas outside of banks, namely investment management firms and insurance companies, that are remaining strong. Industrials continuing to move higher, up 2% for the week, another area that is showing this nice lengthy base breakout. I would like to see a bit more momentum on that MACD, but net very constructive, and again, earnings driven. A number of these bigger industrial names are coming out with strong results and guiding higher. And as we move through, technology is no longer up at the forefront in the stronger areas. You can see that it was flat for the week, and a lot of that having to do with Apple's pullback in response to their weak earnings. Also down here in this lower quartile are areas that have been here: utilities, real estate, materials, and energy. But let's take a look at consumer discretionary. This particular area is now in the throes of reversing its downtrend. You can see that MACD black line poised to trade up above this net neutral area with a positive RSI. Certainly Amazon's advance in response to strong earnings is one reason, but there are other areas in this retail or consumer discretionary area that are on the move higher, and we will share with you certainly one of those names as we move through. So beyond these sectors and the rotation that's shaping up in healthcare, industrials, and discretionary, let's go ahead and move beyond and take a look even further beneath these sectors, because you want to be aware not only of the sector view, but what groups may be moving those sectors so that you can then participate. So here we are with ETFs. Again, that relative strength indicator in descending order. First up here is software. It's been up here at the forefront for some time. The overall group performed in line with the markets, but you can see that it is holding in quite well. Select strength in this area as well, all about earnings. And for those of you that haven't already, use that link below to trial my MEM Edge report. A number of the stocks on my suggested holdings list have experienced very nice year-to-date gains, but more importantly, they have a lot more by way of upside ahead. I talked about healthcare being on the move, and one of the components, this is IHI, the U.S. Medical Devices ETF. Again, strong earnings beneath the move as always. And oftentimes, I've said this in the past, you will see sector rotation take shape as earnings season unfolds. Quick look here at the NASDAQ. It did not fare as well as the S&P, but still up over 1%, recovering from that Wednesday pullback and remaining in a nice uptrend. Also, as we move through, I did want to share with you XRT. We already looked at the consumer discretionary ETF, and this is the S&P retail ETF, and it was up a little over 1%, but take a look now back above each of its moving averages with the MACD poised to cross over into a bullish uptrend. Retailers generally are the last to release their earnings, but there are bright spots already emerging from those that have already reported. So moving through, I did want to share with you today's uptick in interest rates in response to the strong jobs data, and you can see we are back up at that 4% level for the yield on that 10-year. This is something I will keep a very close eye on, because historically, if we do begin to advance to levels that we saw back here late summer into the fall, it was a negative backdrop, certainly for growth stocks in particular. And then taking a look at another area here is, I talked about financials faltering. This is KRE, the regional banking ETF, really down quite a bit last week, and the group lost 7%. Most of that is due to a sharp decline in SBNY, Signature Bank, all about fears relating to those banks that have large commercial real estate portfolios, and the move did move through to other names in that banking area as well. Now, from here, I talked about looking at stocks that have experienced a sharp uptick and then potential moves in other areas also in that same area. So we can certainly take a look at Meta Platforms. Big move today, up 20%. You can see this nice high volume. Last week I did a show about how to trade these gaps up. I would urge you to take a look at that, because we did experience a number of stocks this week that experienced similar price action the prior week, and you'll know how to positively trade them going into next week. But today we're going to take a look at other stocks that are in this internet related area, not directly related to Meta Platforms only related because Meta Platforms did see a nice uptick in ad sales. These are companies that are internet related, and their primary source of revenue is going to be ad sales. So first up here is Pinterest, P-I-N-S, and the stock is due to report their earnings next Thursday, and we can see this constructive price action going into their results with today's gap up into a base breakout with this MACD bullish black line up through the red and a positive RSI. Other news for Pinterest was relating to a potential partnership with Amazon, but in the end, the stock is trading quite constructively going into earnings. Another internet-related ad sales driven stock is Snap, SNAP, and quite similar as it relates to the move back above its shorter term moving averages, gapping up. I'm on the lookout for this black line up through the red to signal a new uptrend. The company is due to report their earnings on Tuesday and very much on my watch list. Now, I did mention one retailer among others that experienced a significant move today, and that's Deckers, D-E-C-K. This is on the suggested holdings list of my MEM Edge report, and take a look, up 14% to a new high. The company came out with record earnings, and you can see in response, the stock was bid quite a bit higher, certainly very different than its competitor, Skechers, SKX, which had a gap down in response to reporting results that were not as strong as anticipated, as well as management's guidance for lower than anticipated growth going forward. The response was swift with a gap down on very heavy volume, and you can see the stock really was not acting well going into their results. That's it for this week. Everyone have a great weekend. I'll see you here next Friday.